Alright everyone, so as you know in the last video I did the second study and now I'm going to go over it with some of my commentary and then apply it on the chart, basically make it practical and that's about it. So just try to make it practical first, go through it, the second study, and then the lessons you learned you look on on the chart, on the latest charts and apply it. Again, if you don't know what this is, it's basically a footprint chart where he has it on point and figure, where his volume on point and figure boxes. All right, that's all it is. And 1 second. Yeah. So this was done by Wyckoff himself, and he did the study which I went over. His own writing. This is the earliest evidence, 1932. I don't know. This was done, I think, in the 30s or somewhere around there, right? And today would be called footprint. Anyway, so let's go through it, and what I'm going to do is try to give my own commentary, and also last videos, the print was very, very small, so I'm trying to make it a little bit bigger, so the traders can see it. That's the best I can do. So, all right. So the market opened, and it rallied. Then it rallied some more. Then it rallied some more. All right. So what you see over here, from rally to rally to rally, or from up column to the next up column to the next up column, is what? Do you see any behaviors here? The only thing you see is a retest here on 2 and 1. It's a retest of this resistance area. All right. So after that, the market goes down. When it goes down, it goes to this level right here, and then it attempts to go up and test this high of this column, and it finally goes back down to the support level. So what do we see here is resistance, pull back to support, tap, retap resistance, and then pull back to support. So support, resistance, support, resistance. But what you will know is from the open to the high, you made progress, and then you pulled back, and then retesting the pullback. So there's a line over here. Okay. And what's key is this 1-1. If you have a support line like that, and you see the volumes diminish, for example, you can look at it from 2 different perspectives. Okay, I want to mention 2 different perspectives: sideways and vertical. So from the sideways perspective, the line of support on the pullback, right? You see this is a 3. Next to it is a 1. If you continue on that same line of support, what do you have? Another 1. If you continue on the same line of support, what do you have? Another 1. So 3, 1, 1, 1 is telling you that there is light pressure, and that's if you're looking at it sideways. So at support, we see it's holding, and there's no pressure there. From a horizontal, sideways, right? There's no pressure. There's no pressure. So we are at a support and no pressure, and it's making that higher low from the open. Does that once, does that twice. Now from the second perspective, if you look at it vertically, what you will notice here is it's 1-1 also. So however you want to view it, sideways testing the level and a pullback to the level is light pressure. So at this point, it made a lot of sense to him to go long on a higher low from the open after the market rallies, right? High or low. And the second thing is low volume pressure, whether you look at it from sideways or up and down vertically. Now, third thing is, there's a third thing also. You always look left to see if there's some type of breakout or there's something. Always look left on a rally and a pullback. You always look left first to see if there's something there. That's something that's holding the support levels is this right here. That 10 print. See that 10 right there? That's 1,000 shares. It's the same as the open. It might even be more than 10, but it's smudgy, but it looks to me like it's 10. So that is a key thing, because what you see all the time when you look left is when the pullbacks pull back, they test high volume prints and high volume areas. It's like a test of a breakout. This is what happens. As long as you have that high volume print or a breakout or whatever, and then it has follow through, and then it pulls back to that same level or around the same level, meaning one box higher, one box lower typically, and it's holding, and then it dries up. That's your cue. All right, that's your cue. That's exactly what happened here, and I'll show you that on the market too. All right. After that, he wants to buy long here at this pullback, and it continues to go up and up and up, and then it creates another line of support. So another line of support. Now there is a point here that you might ask, what about this line of support? Should I buy it? How come I could buy this line of support and not that? Again, look left. Do you see 1,000 shares or extremely big print? You don't. That's why you don't buy the line of support. However, if it broke out and then it pulled back to those areas of high volume, like a 10 over here, this is only 2. If it was holding line of support and there was a 10 or a higher number, and it's holding and holding, and then the volume decreases, that would make the case for a potential rally higher. That would make the case that the guys who bought 10 are holding the support, and they've bought everything until the volume has diminished and there is no supply, and therefore it should go higher. Okay, so the next one is that it rallies, and over here what you're noticing is from high to high to high, the shortening of the thrust, and one very important point is the 17. Not only is it a shortening of the thrust, but there is supply. The supply is in the form of 1,700 shares. That's the initial time that we see supply. So 1,700 shares on the high print, not the low print, but the high print. There's a problem there. Why? If you have 1,700 shares and it's high volume and it's demand, shouldn't you have follow through? That's the question. How is it you have 1,700 shares, it has no follow through, and it pulls back? You see? Therefore, it is supply, and it pulls back to basically the level of support. As it moves to this level of support, these guys, the 10s, the guys who do the 10s, they come in and they start buying, and it rallies. So this is demand. Why? Because it moves up. If you have supply, it should move down, as it does here. If there's demand, it should move up. So demand comes in and buys this little pullback that the minor climax here caused, all right, or the distribution here or the supply here caused. The supply here caused the market to pull back because of the heavy selling. The demand here came in to buy and continued the rally to that same level that there was supply at, and then it went up until here. And this is one of the key points of this study also. The key point of this study here is that this is a low volume rally at the high, and again you have a print, a high volume print at the high, which is causing the supply, which is where the supply, they start more supply coming in, because as you can see what they're doing here is selling rallies. Like this is the rally here, this is the rally high here. So sell the rally highs. Supply wants to sell the rally highs. That's all it is. All right. And this time, when they come in, supply selling heavy with the 1100 shares that pushes it down. Now the question here is, if you have supply coming in on the rally highs, do you still have demand coming in on the pullback lows? Again, supply is coming in on the rally highs to cause the pullbacks. Supply is coming in on the rally highs and to cause the pullbacks. Is demand coming in on the rally lows? The answer is no. You don't see that 10 print here, here, here. What you see instead is the 5 and the 11. And this is the first time you have I think it's the first time that on a pullback down, you have on a red column, you have basically a column of O's, like X's and O's. So the O's has a big red print. It's like the biggest red print on a column of O's. And that 11 is the 1100 shares, which signifies the change of behavior. Once it does that, you have to ask yourself, is demand still buying the pullbacks like it did here? Is it still buying the pullbacks? Is it still buying the pullbacks? And no, it's not. So that's when basically the base over here is going to form, the distributive base, the retest, and finally the break. All right. So now let's look at it from a risk management angle. From a risk management angle, until this point of weakness and all of that, what happens? So he takes the short over here. Not short, the stop. He has it after he goes long. He puts it two boxes below the support low. 2 boxes below the support low. Okay, it continues up, 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 up until he sees evidence of what? The change of behavior. He starts bringing it closer. The light volume pullback. How do you know it's light? Ones. The ones. There's a problem because of the ones. So you're going to pull it. You could put it 2 boxes below, but he's pretty sure that there's a real problem. So he's going to put it right below the low. All right, so right below the 1. Not 2 boxes below, but right below the 1. Why? Because you have a change of behavior and a low volume pullback. Just to emphasize this even more, what is the volume total on this column? I can't really see it that well, but it's at least 11. That's just the print. I can't see the bottom too well, but I believe that it's at least 11 or more. So you have 1100 shares on the column total. All right. What's the one before it? The rally. I think it's like 800 shares. So you see the pullback has more volume than the rally. Again, the pullback column total has more volume than the rally, indicating that this is supply. I mean, rally should always have the highest volume. Even in point and figure, when you have the rally or the column, all the volumes of the other pullbacks should always, always, always be lower. If they're higher, you got to ask yourself, what's going on? Why is the rally? And I'll show you examples of how that turns the market as well. The next thing to ask is, if you have a 1100 down, how much are the up rallies? This one here is only 200 shares. 1,100 down, 200 up. Again, at least 1,100 down, 200 up. The ratio here of down volume to up volume is 5 times more than the up wave or the up column, meaning the up column has only 1/5 the volume of the selling column. All right, so clearly the volumes have shifted, where the down volumes are greater than the up volumes. And I bet if I did all of that back here, you would see the up volumes are greater. Now it's on the rally columns, right? Up volumes will always be greater on the rally columns until here, where the down volumes are greater than the rally columns. And then finally, you get this retest and you get a break. And that break shows that the down columns have more volume than the up columns. So that's been established. All right. Now, where does it go short? On the last up wave that does the test, it's break. Okay, so it's break is where he considers the short. He wants to see a break, meaning the up wave. Now, question is, if this thing right here, 101, was followed by break down, would he go short? He doesn't say that, but in my opinion, if you have a change of behavior, if you have a pullback, and then you have a break, you can get in on the retest. Why? Because it's already changed. The trend has changed. The other thing to mention is you need that lower low, and this is where you get it. All right. The last thing to mention is that you have base building. You have your cause, sideways cause. That's also important. All right, very, very important, because what that will do is it would mean that it's not just on 1 or 2 prints, but there are lines of resistance that have been established. Like here, there's a line of resistance. These are lines of resistance. And those lines of support and resistance will create what? They will create your you see this I have here on the green and the whatever right here on my chart in the background. You see how the green becomes your POC? That's what happens. They become your POC. They become your POC. They become POC or high volume nodes. They're lines of support and resistance, lines of accumulation and distribution. All right, anyway, after that, it breaks, and then it pulls back. You always look left. Here, I don't really see much, right? I don't really see much over here. So it's just a break and test. So, I mean, I don't know if this 0 or 1. If this was a 10 right here, then this would be you will already be prepared in advance to short this. Why? You always look left. Anyway, then it just goes down. Over here, you know to get out. Why? Because of the low volume rally. The volume rally is diminishing, and you have demand coming in here at the bottom, and that is your sign that there is some demand. It can continue to go lower, but once you see the sideways basing action over here and then finally the break, that's telling you there's an issue. Because if it's basing, you have demand, you have a low volume rally, you have a line of support, guess what? Your POC or HVN will be right here. And what happens? Goes up, goes back down to hold. And especially when you have some high prints, you have that 4 here, you have the 6 here, 6 here, 5 here, goes back, tests that line of support, and then finally goes up. All right, so that's the commentary of mine on this chart. The key lessons is obviously you can have a change of behavior on this. If you can look at it from the perspective of a column, but you can also look at it from the perspective of a print. because it's a tape reading chart. What else you see? You see the lines of resistance or lines of support. One important thing to mention is that this is nothing more than like a low volume test or a low volume pullback where he went long. All right, it's a low volume test or a low volume pullback. Low volume test or low volume pullback, he wants to buy. He also buys the higher high, just like he wanted to go short here. I think he went short on the break here, on the break of this low. All right, now let's go into real market action with some of this and start applying it. I've already, anyway, let me bring it up. So, I mean, a lot of times I use indicators and signals but you cannot just use them alone. You have to use your judgment. If you don't use your judgment, you cannot put the whole piece together. Right? For example, it may give you some low volume pullback, but you don't realize the level you're at, and that's error. All right. So as you can see, this is nothing more than a point and figure chart, and all I'm doing is oh shoot, I messed it up. Anyway. So listen, there's the way I view things is in Wyckoff's he looked for a low volume pullback, with the volume diminishing to the side and all that. Maybe this is not the greatest study, but because it's not some really good action here, but it's not that bad. So for example, you have you have this break. I'm looking for a low volume pullback, and none of them are low. So here you have something. For example, I'll give better example. I'm just showing you what happened. So, like over here, you have a pullback, right? A break and a pullback. Where is your low volume pullback? The answer is right there. Why you have this breakout or breakdown right here on the 58s? What do you have? You have a break. And now it's pulling back. You always look left. Where's that pressure? That pressure came from that 23,000 contracts, which did what? Broke the low. You see what I'm talking about? Right, where is it? Where is that line? What caused the damage? It's right there. The 23. You see that? That took out the low. That's what happens. Over here, you don't really see it, but over here it's pretty clear. It's 23, broke through, followed through, whatever. And what's your point of reference? 58. 58. If I have market pressure that goes beyond 58, then it doesn't make sense. It does not make sense because all your pullbacks should be lower than your rally volume or the breakout volume. All your pullbacks, even the case of effort, All right, so now you have your pullback 1 is on 36. Pullback 2 is on 53. It's increasing. That's a problem. Right? It's increasing. That's a problem. It needs to decrease. When does it decrease? Right here, 18. Bingo. Right there, 18. 18,000 contracts. And you want to examine it from the perspective of 18 versus 58. So rule number 1, when the pullbacks happen, they should not be greater than the breakdown volume. Rule number 2, I would prefer for them not even to be close to the pullback volume, meaning I would not prefer this 53. Over here, I'm much more certain. All right. Rule number 2 is the pullback volume should be a small fraction of the rally or breakout volume, maybe like a third or less. This fits the bill. Okay. So because it does that, if you're trading pullbacks, I think it would be okay to short the break of this low. And it does. it breaks on increasing volume and all of that and goes down. It's just one example. I'll show multiple examples. You need trend on your side. It should not be a ranging market. There should be some type of thing in the background that supports whatever, because you don't just trade signals. You have to have some sense, right? So for example, you have this here, this move up. Right? There's a breakout back here. There's some follow through here. What do you start noticing in the lines of support? Right there. Ding, 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 ding. And then what happens is you see this behavior also. These two tell you that the move is going to continue higher, right? Because there's no supply. If there's no supply, the market is basically jacked up to go higher. There's no supply, the market is ready to go higher. So sometimes it goes higher right away, and sometimes it drives lower and then goes higher. It drives lower to the support level or springs it and then goes higher. This is what happens. Here we'll give another example. All right, so the market is going now, it goes from 40 to what? 15 here. Okay, and this, because look, you already have trend on your side. You need evidence that supply is gone. Again, when you're looking to get the next move up, you need evidence that supply is gone first. There's a line of support and evidence that supply has diminished. So you have lines of support, and then this is evidence of supply is diminished, and you compare it to the prior red bars. For example, this 10 and this 40, that's a problem. But the 40 and the 15 is telling you it's a test on decreasing supply, and now you just have to wait for that move. Okay, and then sometimes they'll have a big spring and then go higher, which is what happens. Like the lines of support will get tested and sprung. That's what happens. Now I want to give some example here. I don't know what the hell is all this. This is a example of this happened. I forgot when this happened. I was actually ready to get long right above this high, but anyway, this is base. You had your climax. You had all of that. Now you're going to notice that the lines of support, but look at the supply pressure. Supply pressure 17, and it has to be decreasing and small numbers. 16. Finally, there's 10. This 8. It's gonna, if you have that, it's gonna go. It's gonna go, and it's gone. Now take a look at some very clean examples, but the idea is that you cannot just, okay, I'm going to all right, let's take a look at some other examples. I got distracted there. All right, so these are some clearer examples of actual market action that's set up just, last trading day. I mean, basically Friday. So this is very, very clear, and you're going to see what worked, what didn't work, and all of that. All right. So where am I? Where was I? Okay, so okay, so yeah, this was the breakout that happened in the morning. So you break out in the morning, all right? Now it pulls back. You always look left here, 42s and 46s, and basically what's going to happen? They're going to hold, or they're not going to hold. All right, what we see is 3, 8, then 30, then 46, and then 42. These are big prints. They're increasing from 8 to 30 to 46, and they get tested, and it starts going sideways. And now what you want to do is look at the red pullbacks. So that's 115. 115 is almost half of less than half of the breakout, and then you get the low volume testing here, the second red print, which is 38, and you have a base, you have the low volume pullback, and it's going to go. Now it goes again, 91 on the breakout. Remember, your point of reference is the breakout volume. Again, your point of reference is the breakout volume. Then the green bars, I have good follow through. After that, you have pullback. What do you notice? 41, 34, 14. Declining pullback volumes. Here, and here, and here. 41, 34, 14, you get low volume pullbacks, and it's going to go. Boom, it does. Right? Now, on the flip side, let's say you have high volume, volume breakouts, but then this fucker comes in, right? This is when you don't buy the pullback. You have 268 up and 252 down. It's too much volume on the pullback. It should not be that much volume on the pullback. So you do not even think about taking the pullbacks, right? Here you had heavy volume as well, but it was less than half. 242 versus 115 is less than half. 115 less than half of 242, right? But here it's like 90%. So how can your pullback volume rival your breakout volume? It's telling you don't buy. That's what it's saying. It's saying don't buy. There's too much selling pressure. So you just skip that. Here again, you have breakout volume of 40. Then you have the first pullback has 27. So under 75% for sure, like probably near 70%. Then total, very little volume, totaling 15. So that's it. That's your low volume pullback, and then it's going to go. So now what are some of the things that happen after breakout? You're going to have a breakout, and you do not buy the pullback if the selling pressure is too heavy. Generally, you want less than half. I mean, that's just a point of reference, right? So and it's very easy to see, even from a column perspective. Just look at the columns less than half. You don't even have to do the numbers. You just look, okay, big column, half, or 1/3 column, it's going to go. This one is not half column. It's more than half, almost rivals the size of the bar volume right here. Here, big one, right? And then ding, ding, ding. Another thing you can do is you draw a line going down like that, and you can very clearly see, how the peak high to low is a very nice declining line, and it's going to go right here. You can't really draw a declining line. They're almost the same, right? So it's that's generally the over here, for example, you have that and you have this, that type of, it should have that type of feel. Like here you have 100, and then what do you have? Goes down, and then boom. So this is the idea when it comes to the low volume pullbacks on a tape reading chart. You'll also notice that when I looked at this, right? Look at what I have supporting me on as the line. Right here. You have your POC, which was caused by this line. This line here. Your prices were above and then pulling back to test your POC. Pulling back to test your line. Okay. The line of support. It's basically going to become support. Right? It has to break through and trade below for it to become resistance. All right. I think that's about it. And the reason why I pulled back like this was climactic right here. So they sold the climax, basically took the profits. broke it down to a prior line here and reaccumulated or rebought. Okay, so that's all I have. Again, if you want to follow along, it's just a study of a footprint on a what chart? On a point and figure chart, and Wyckoff studies are there, so you can get them. They're online. It's, they were done so long ago, I think in the 1930s, and there's a lot of other styles of the footprint. I've seen delta, bid and ask, and all that, but in my opinion, it's just simpler, cleaner, easier just to read the volume and know basics like, okay, high volume followed by a low volume pullback, line of support. On the left hand side, you have a big print. We'll set up what? The next rally, because line of support, low volume, boom, boom. It's easier to do that than to read every print, bid ask, bid ask, bid ask, or delta, bid ask, all of that with footprint statistics at the bottom. All of that is just, this is a simpler, cleaner, easier. And I know exactly where it's going to pull back to, because those high volumes have been highlighted in white. Even here, the selling comes in. If you're long here, to get out until it comes back down here where you have a big print, white print here, and it's holding, get another low volume pullback. The white print comes in, which means they're reaccumulating, creates a line of support, and it's going to bust. That's all, folks. Take care. Have a good rest of the weekend. Bye.